Good morning, ladies and gentlemen. Welcome to Market Forecast, brought to you by Options University. This is Butch Shorak. It's Monday, June 23rd, 2014. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit. And as always, do not trade with money that you cannot afford to lose. Exactly what did the market do last week as we looked at the Fed announcement coming out? And we see that as we look at the Dow, the NASDAQ, the S&P 500, the Russell 2000, all we see is positive numbers at the change, and the percentage change for the Dow up 1%, NASDAQ up 1.3%, S&P up a lofty 1.4%, and look at that Russell 2000, what has been the lagger for most of the year, up 2.2%. Now, as we look at the year to date, our percentages here, we see the Dow up 2.2% per year, NASDAQ up 4.6% per year, S&P up 6.2% per year, and finally the Russell, which broke into positive numbers last week, now up a lofty 2.1% for the year, and showing us how things can really move in the market as we see an explosion take place to the upside. Looking at economic announcements coming in the next week, let's take a look and see what we've got going on Monday. Monday, PMI coming out after the market opens and existing home sales on Monday. Looking at Tuesday, we have more housing information coming out at 9 a.m. Case-Shiller coming out at 9 a.m. New home sales coming at 10 as we see homes having a major presence this week. Consumer confidence coming out at 10. How is the consumer driving the overall market? And finally, that pretty much takes care of Tuesday. Let's take a look at Wednesday. Wednesday, we see durable goods order before the market opens, followed by GDP, which certainly can move the market. Will be one of those things of interest that they'll be looking at this week to see exactly what the GDP is doing. Jobless claims come out every Thursday morning at 8:30, giving us a weekly report on jobless numbers, and we see personal income and outlays coming out at 8:30, and that's all of consequence to us on Thursday, June 26th. And finally, on Friday, we see consumer sentiment right around that 10 o'clock time as we see a week filled with announcements every day of the week this week, very much like last week. Of course, the big one last week was the Fed announcement. Let's take a look and see what the SPX is doing as far as the overall trend, and can you say uptrend? The 30, above the 50, above the 200, and we have had nothing but a breakout for the last 6 weeks. As we see, it just keep right on clicking. A bit of a pullback last week as it came back to that 1925 level and then continued on up. So we see we are in an uptrend, and that uptrend continues. There are no summer doldrums this year, and this is one of those years where they have the exception about leaving in May. Now, taking a closer look at the SPX on a 1-month chart, we see that as we looked at the week, we look at the last 5 days. We see not much happening on Monday, not much happening on Tuesday. Fed announcement came out, and they were happy, and nothing big really came out that was a big surprise. Decreased the easing by $10 billion, but made the statement that they expected interest rates to stay low for quite some time into the near future. The status quo is being maintained, and with that on Thursday and Friday, we continued that upward movement on the stock market as we see a breakout to the upside again. Now, we know we'll have a pullback. We're a bit of ways away from that 30-day moving average, but boy, we certainly have power. Every time we have any kind of a buyback like we've been talking about, any kind of a pullback whatsoever, it's time to get on board. This last one didn't even pull back to the 30-day moving average. What did the Dow do? Well, we know when we looked at the summary at the beginning of the commentary that the Dow was up for the week, and so let's take a look and see how it looked compared to the S&P. So looking at the Dow, we see that it looks very much the same. Did have a bit more of a pullback, did almost pull back to the 30-day moving average and ready to break out. Not showing us the same strength that the S&P showed, but certainly in an uptrend as we look at the Dow. Looking at the NASDAQ, again, we're sitting there. We're sitting basically at some kind of resistance. We'll see if we break through that today. And look at that volume spike on Friday. All right, and finally, let's take a look at the Russell 2000 as we see it continued right on up and getting very near its 3-month highs. As we see the crossover take place with the 30 and the 50, and now putting us in that bullish position as the Russell 2000 showing us some summer glory. All right, well, what happened to some of the other indexes? Well, we see the VIX, of course, down at 10.5, which is about as low as we ever see it go. So at some point along the way here, we can expect a pullback shortly. But we have no reason to change trend until that happens, and so the trend is still up. Every single pullback gives us a buying opportunity. Looking at our ETFs, the bonds, looking at TLT, we see that they did absolutely nothing pulling back. We did have a bit of a rally in the bonds as the market continued sideways earlier in this year of 2014, and now we see that we're in that upward rally. Not that much interest in bonds, no great demand as it goes sideways. That safe haven of gold, well, there really is not anybody seeking that safe haven, but look at what happened to gold this last week. A bit of a pop-up with volume, so you just never know when these stocks are going to do it, and popped above the 30, 50, and the 200 as gold showed us a little bit of power this last week. Well, what caused that? World unrest, Iraq. SPY, what kind of volume did we have this last week? Well, we certainly had more volume than we had during the rest of the previous month, but certainly no big, huge move up in volume on the SPY as we continued our upward trudge, and that's basically what it looks like as we keep trudging along, moving upward every time we get. Every single pullback is a buying opportunity as we see new highs being made in the market and moving into the summer. Looking at the financials, again, kind of looks like the NASDAQ and the Dow. We're sitting at resistance. We'll see whether we get another breakout or whether we soon have that little bit of pullback that we get that we were talking about. Will oil pull back during the summer? Well, probably not, as we see oil moving up into new highs, and it has that summer cycle. So with that thought, for those of you that are gold members, stick around for our stocks to watch. For those of you who'd like more free videos, go to www.optionsuniversity.com, free gold. And with that thought, this is Market Forecast brought to you by Options University. And this is Butch Shorak, and it is June 23rd. 2016, and thank you much for being 2014, and thank you much for being here. We're getting ahead of ourselves as we reach out in those years. We'll see you next Monday, June 30th.